Right now, Bitcoin is not trending. It's not breaking out. And it's not reversing either. What we are seeing is a balance zone, where the market is not rewarding prediction, but exposing wrong positioning. In this environment, being early and being wrong often looks exactly the same. In this video, I will explain the higher time frame structure, why the recent upside move failed to follow through, and what actually matters at this stage. This is not trading advice. This is about market structure and risk context. Let's start with the 1-hour chart. Yesterday, the U.S. session reference candle engulfed the prior Asia session reference candle to the upside. On the surface, this looks bullish. But structure is not defined by direction alone. It is defined by acceptance. At the same time as the upside engulf, the upper band of the long-term Bollinger Band closed and turned downward. This detail matters because volatility expansion that fails to stay open usually signals hesitation, not continuation. In strong trends, higher time-frame volatility stays open and continues to expand. Here, it did not. That tells us this move was not being accepted yet. Structurally, this was not clean continuation. It was a breakout attempt under test. Now let's move to today's Asia session. Price opened near the upper boundary of yesterday's U.S. session reference. This location matters because it represents an area where continuation should have been easy if the trend was real. However, Asia failed to break above its own reference candle. That failure is important. When Asia cannot confirm continuation, it often tells us that the prior move was driven more by positioning than by genuine demand. Instead of expanding higher, price rotated lower and returned back into value. This behavior is typical of markets that are re-evaluating direction, not committing to one. Right now, Bitcoin is trading between the center of yesterday's Asia reference and the center of yesterday's U.S. session reference. This area is not bullish, and it is not bearish. It is balance. Balance represents agreement, not conviction. It is where buyers and sellers temporarily agree on price, while stronger participants wait for confirmation. Inside balance, the market is not searching for direction. It is searching for mistakes. The space between session centers is where prediction loses its edge. Inside balance, breakouts fail more often, indicators contradict each other, and directional bias gets punished. This is not where trends begin. This is where late longs get trapped, early shorts get squeezed, and weak positions are forced out. If price is inside value, direction does not matter yet. Acceptance does. Now let's look at the 15-minute chart. Price is currently supported by the 120-period moving average, the lower long-term Bollinger Band, and the lower short-term Bollinger Band. This looks like support, but support alone does not imply continuation. In balanced conditions, support often functions as a mechanism for short covering and time absorption, not aggressive buying. That means price can hold support without actually becoming bullish. Unless price can reclaim value and hold above the midband, this support does not change the higher time frame structure. From here, there are only two structurally valid outcomes. The first scenario is acceptance above value. For upside continuation to be valid, Price must hold above the value center. Short-term volatility must expand upward. And the 1-hour chart must reclaim both Asia and U.S. session centers. Only when acceptance is visible does continuation become meaningful. The second scenario is failed re-acceptance. If price fails to hold here, 15-minute support breaks on a closing basis, value is rejected, and price accepts below session centers. In that case, yesterday's upside move becomes a failed breakout, opening space toward lower value zones. This is how failed trends often reveal themselves. This market is not asking whether price should go up or down. It is asking, who is positioned wrong? Until price leaves this balance area, every move is a test, not a signal. Clarity comes after acceptance, not during balance. Thanks for watching. This channel focuses on market structure and risk context, not trade signals.